Well, since 1987, small caps traded on a median PE basis at a premium to the S&P. The S&P is at 17 times. So I think small caps could, in the next couple years, outperform by more than 100%.
And what do you think about some of the macro issues that I think create a different level of uncertainty? We keep talking about the bond market and what that might be saying, what you think is happening with gold. Are the bond vigilantes going to be this governor on whatever you think is going to happen in Washington?
As James Carville famously said, the bond market is, everyone's scared of the bond market. So that is something we need to watch. But we've had plenty of periods where stocks have risen with bonds rising. And I kind of agree with Powell's assessment that yields have gone up not because of inflation, but because there's sort of a change in growth expectations.
Tom Lee of Fundstrat highlights the market's strong rally following the resolution of election uncertainties, driven by renewed confidence and optimism. He notes the Trump victory's impact on sectors such as Bitcoin, small caps, and financials, suggesting these areas have significant growth potential. Small caps, trading at historically low valuations compared to the S&P 500, are particularly well-positioned for outperformance in the coming years. Addressing broader economic trends, Lee points out that rising bond yields are more about improved growth expectations than inflation. He remains bullish on the market, projecting the S&P 500 to surpass 6,700 next year, supported by dovish Fed policies, better earnings visibility, and multiple other tailwinds. This optimistic outlook is further bolstered by policy shifts and growing animal spirits among investors. In the tech sector, companies like Amazon and Nvidia are gaining traction, with Amazon impressing investors through profitability and AI-driven growth prospects. Lee underscores the importance of robust capital expenditures and innovation, which continue to drive the technology narrative. These developments reflect the broader market's focus on positioning for long-term gains.
First post-election appearance that we've had, you knew Trump was going to win.
Well,
not many people did.
Yes, that's...
I'll give you credit. Are you saying you didn't? Maybe you didn't say it in so many words, but you said it.
Yes, I'd say that we were placing a lot more weight on what the betting markets were pointing to, and so and we, when we look at all the deltas, that's
and you saw it in the Trump trade,
yes.
And you saw it in Bitcoin,
correct,
and you saw it in sectors of the market that would benefit from.
That's right.
Presumably, but who knows from a Trump presidency? So 1,500 points out of the gate. More to come, or are we're already there?
I think we need to respect this move. I mean, there was a tremendous rally post-election, and it continued yesterday. I think it really does reflect a lot of money was taken out of the market because of the uncertainty around the election. And now we know that because of policy changes and animal spirits, that this is really going to benefit things like Bitcoin and small caps and regional banks and financials. So I do think there's still a lot of upside. I mean, small caps trade at 10 times median forward earnings. I mean, that's a...
So what do you think that should be, 12 times? I mean, what's the opportunity set in your mind?
You're pretty bullish.
I think I'm pretty positive on the U.S. and fundamentals, yes.
Okay, good.
Why don't we start with Amazon? What did you think about what you saw? And I thought it was pretty interesting. Cloud actually missed estimates, but still we're seeing the stock move higher.
Yeah, that's right. Amazon did have a couple of blemishes, and after yesterday, you might have thought that anything was going to get punished, but not Amazon today. And I think a lot of that had to do with the profitability of the company, which was the big surprise in the quarter, is that just a huge amount of profitability on the bottom line. And I think that gives investors a lot of comfort. And the sales numbers were decent. They were very close. So no surprise that stock is up. It also hasn't been one of the biggest performers of the Mag 7 or of the technology area. So some room to go for them.
We're really seeing an impress investors. I want to get your take on it. They increased CapEx by 81%. At the same time, we saw margin expansion. That's pretty tough to do at the same time.
It really is, and the CapEx number was very important. And now that we're through the big CapEx spenders, the cloud spenders, you can see that they are all still focusing on CapEx and spending huge amounts of money. And the comments that Jassy made about the possibilities for AI and generative AI, and their focus on that continues to mean that story continues to run. That should be good, a good read through for Nvidia, which will be the last of the Mag 7 to report.
Okay. Let's talk about Apple very quickly. Those shares down just over 1% right now. It really seems to be the guidance because there was a lot of other things in this report to like. Gene Munster from Deepwater, one of the people crunching the numbers, according to his numbers, the guidance was about 4 to 6% revenue growth in the current quarter. The street was looking for almost 7%. Is that make sense to you that the stock's down 1% just off that, considering all the other great things, including, the iPhone commentary from Cook and also the numbers, 6% increase?
Yeah, I think that Apple has had a nice run this year in anticipation of the iPhone 16 and AI and the rollout, and both of those were really a bit on the disappointing side as far as what you can actually do with the phone and the functionality. The fact that the sales were okay was pretty good. I think that was, for at least from my perspective, that was better than feared. And again, that stock has not really performed that well in the last couple of weeks. So the fact that it's only down 1% is good, and the fact that it's down is fairly mild, given that there's still a lot to come on the iPhone 16.
The decline might be kind of mild, and I agree with you on that, but just considering its weighting in the market, it's a really big deal. I do also want to talk to you about Apple's forward PE, 31 times. We talked a lot on this show about investors getting religion when it comes to valuation. What we're seeing from Apple, this 1% decline, which I know isn't a big number move-wise on a percentage basis, but considering its weight, again, huge. Is this a sign that maybe investors are paying more attention to forward PE, valuation, and kind of the sense that this market's priced to perfection? Is this a read on what we're going to see for the rest of not only earnings season, but just the rest of the year when it comes to the market?
Yeah, that's what we saw really yesterday, and that's kind of what you see when the market reaches up and starts bumping along its all-time highs, and the PE multiple gets into the mid-20s, is that you really are, like you said, priced to perfection, and when you get misses, even if they're slight, the market tends to just make a reaction there, and that's what we got yesterday, it seems, is that none of the news was really terrible across the board, but it was a little bit less than what people were expecting. And so when you have a market that is based on strong growth and strong earnings growth, and you don't get as much of that, people start repositioning.
I thought that a sweep was, for either party, was the death knell for the markets and frightening to all involved. And now we're getting a sweep. Why isn't it more frightening? Maybe the sweep the other way would have been a little more frightening to some.
Yeah. I think part of the reason investors are getting somewhat optimistic is that President Trump is entering office again, but this time with a lot more knowledge of how to build a cabinet and a team. And so in some ways, this would end up being more market friendly. And I think that's why investors are becoming optimistic. I kind of agree with the idea that there are animal spirits growing.
He'll never be deficit friendly, will he? He will be deficit friendly. He won't be, if we cut taxes on tips, Social Security, overtime, remove the SALT cap, extend the tax cuts. If you do all those things, that seems like
it's going to be very difficult to fix the deficit with just changes in taxes and spending. But it's probably why Bitcoin is kind of interesting here, because it's potentially a treasury reserve asset. And, if Bitcoin rises in price, it actually helps offset the liabilities, which is the deficit.
So you were at 150, I think, on Bitcoin, weren't you? But
yeah.
Not necessarily by the end of this year, or?
I think 6 figures is still possible for it before the end of the year, yeah.
And then more next year and the year after?
Yeah, I think because now, post-halving and now Bitcoin's becoming a lot more relevant, and I think maybe the regulatory overhang is diminishing, that there's a lot of upside from here, yes.
Okay, S&P, end of next year.
Well, between now and year end, 5 to 10% is probably the base case, just because that's the type of rally post-election, and we have a dovish Fed and, the normal seasonals.
Is that the right move right now for the Fed?
I think inflation fighting war is largely over, and the real rate is still too high. So I agree with Fed's view that we need to move towards neutral, which is towards 3%. So I think it is supportive of markets, and business investment has been constrained. So I think these things are positive.
So what about 2000? What's next year? Is that 25? They move so fast. They're like months now, the years. So what about 2025? So 5 to 10% more would put us well above.
Yeah, more than 6,000 before year end. I think at least for the foreseeable future.
No recession.
No recession, and
people want you to answer when I ask you a question. So what are you saying? 60, what hundred on the S&P?
I think well past like 6,700.
No,
sometime next year.
6,700.
Yeah, sometime next year, because
that's another 20%, isn't it?
Yeah, it's maybe 10, 15. Yeah, because margin debt hasn't really risen in the last 4 months, and the stock market's up. So we know investors haven't been adding risk. And now we have earnings visibility, and we have a continued dovish Fed, and then this election's behind us, so multiple tailwinds exist.
In conclusion, Tom Lee highlights strong market growth post-election, with opportunities in small caps, Bitcoin, and financials driven by supportive policies and investor confidence. He projects continued gains for the S&P 500, supported by improving earnings and a dovish Fed stance. Lee also points to tech companies like Amazon, emphasizing their profitability and AI advancements as key drivers of future growth. He suggests innovation and capital investments will fuel long-term opportunities for investors. What are your thoughts on the potential of small caps and Bitcoin in the current market? How significant do you think AI will be in shaping tech industry growth?